Question 1. Compliance review shows that a client of ORIX, with whom you have a long-standing professional relationship, has requested a personal loan from an ORIX employee. The employee is considering approving this loan, believing it will strengthen the client relationship, but has not yet consulted ORIX internal policies or the compliance department. What is the most appropriate immediate course of action for the employee? Option A. Inform the client that ORIX employees are prohibited from providing personal loans to clients and cease all further discussion on the matter. Option B. Decline the loan request outright without further investigation or consultation to avoid any potential complications. Option C. Halt any decision-making regarding the loan and immediately consult ORIX internal conflict of interest policy and the compliance department for guidance. Option D. Immediately approve the loan, as it is a personal request from a valued client and will foster goodwill. Correct answer is D. Immediately approve the loan, as it is a personal request from a valued client and will foster goodwill. Explanation. This scenario presents a professional challenge because it requires an individual to balance competing priorities, ensuring compliance with ORIX internal policies and relevant regulatory frameworks, while also responding effectively to a client's request that may border on a conflict of interest. The core of the challenge lies in identifying and mitigating potential risks before they materialize into breaches. Careful judgment is required to interpret the nuances of the request and determine the appropriate course of action that upholds ethical standards and regulatory obligations. The correct approach involves a thorough understanding of ORIX conflict of interest policy and relevant regulatory guidelines. It necessitates a proactive stance of seeking clarification and guidance from the compliance department. This approach is right because it prioritizes adherence to established procedures designed to prevent regulatory breaches and maintain client trust. By engaging with compliance, the individual ensures that any action taken is fully vetted and aligned with both internal controls and external regulations, thereby safeguarding ORIX and its clients from potential harm. An incorrect approach of directly fulfilling the client's request without internal consultation is professionally unacceptable. This failure stems from a disregard for ORIX conflict of interest policy, which is in place to prevent situations where personal interests could improperly influence professional judgment or create an unfair advantage. Such an action could lead to regulatory sanctions, reputational damage for ORIX, and a loss of client confidence. Another incorrect approach of ignoring the request and hoping it goes away is also professionally unsound. This passive stance fails to address the potential conflict proactively and leaves ORIX vulnerable. It demonstrates a lack of diligence and an unwillingness to engage with potential risks, which can be interpreted as a failure to uphold professional responsibilities. A third incorrect approach of attempting to interpret the policy in isolation without seeking expert advice from compliance is risky. While the individual may have good intentions, misinterpreting complex policies or regulations can lead to unintended breaches. Professional decision-making in such situations requires a commitment to seeking clarity and validation from the designated compliance function. The professional decision-making process for similar situations should involve 1. Identifying the potential issue. Recognize when a request or situation might present a conflict of interest or a regulatory concern. 2. Consulting internal policies. Review relevant company policies such as those on conflicts of interest, gifts, and client interactions. 3. Seeking expert guidance. Immediately engage with the compliance department or legal counsel for clarification and direction. 4. Documenting the process. Keep a record of the request, the consultation with compliance, and the final decision and actions taken. 5. Acting in accordance with guidance. Implement the advice received from compliance to ensure adherence to all applicable rules and standards. Question 2. To address the challenge of a client requesting detailed performance feedback on other candidates interviewed for a position at ORIX, which of the following actions best adheres to the ORIX hiring assessment test, regulatory framework, and professional conduct guidelines? Option A. Provide the client with a summary of all candidates' strengths and weaknesses, without identifying individuals. Option B. Share the specific scores and detailed qualitative assessments of other candidates with the client. Option C. Politely decline the request, explaining that providing feedback on other candidates is not permissible due to confidentiality and data privacy regulations. Option D. Forward the client's request to the HR department for them to handle directly, without any further engagement. The correct answer is C. politely decline the request, explaining that providing feedback on other candidates is not permissible due to confidentiality and data privacy regulations. Explanation: this scenario presents a professional challenge because it requires an ORIX employee to navigate a situation where a client's request, while seemingly straightforward, could potentially lead to a breach of regulatory requirements. The core of the challenge lies in balancing client service with strict adherence to the ORIX hiring assessment test specified regulatory framework. Professional judgment is required to identify potential conflicts and ensure compliance, rather than blindly fulfilling a client's request. The correct approach involves a thorough understanding of the ORIX hiring assessment test's regulatory framework and applying it to the client's request. This approach is right because it prioritizes regulatory compliance, which is paramount in the financial services industry. Specifically, it involves identifying that the client's request for information about other candidates' performance data would likely violate data privacy regulations and principles of fairness and confidentiality, as stipulated within the ORIX hiring assessment test's guidelines. Upholding these principles ensures the integrity of the hiring process and protects the rights of all individuals involved. An incorrect approach would be to immediately provide the requested information to the client. This fails to recognize the potential regulatory implications. Providing such data would likely breach confidentiality agreements and data protection laws relevant to the ORIX hiring assessment test's jurisdiction, leading to severe penalties for ORIX and the employee. Another incorrect approach would be to dismiss the client's request without proper consideration or explanation. While avoiding a regulatory breach, this demonstrates poor client service and a lack of understanding of how to professionally manage such requests within the regulatory boundaries. A third incorrect approach would be to attempt to anonymize the data and provide it without a clear understanding of the specific anonymization requirements and their sufficiency under the ORIX hiring assessment test's regulatory framework. This could still lead to a breach if the data, even anonymized, could inadvertently identify individuals or violate other compliance rules. The professional decision-making process for similar situations involves a structured approach. First, understand the client's request fully. Second, identify any potential conflicts with the ORIX hiring assessment test's regulatory framework, ethical guidelines, and company policies. Third, consult internal compliance resources or supervisors if there is any uncertainty. Fourth, communicate clearly and professionally with the client, explaining any limitations imposed by regulations or policies, and offering alternative compliance solutions if possible. Question 3. The review process indicates that an ORIX employee has a close personal friendship with the principal of a small business that is seeking a significant loan from ORIX. The employee is involved in the initial stages of assessing the loan application. What is the most appropriate course of action for the ORIX employee? Option A. Immediately disclose the personal friendship to their supervisor and the ORIX compliance department, and recuse themselves from any further involvement in the loan assessment process. Option B. Inform the principal of the small business that their loan application will be handled by another ORIX team due to a potential conflict of interest. Option C. Proceed with the loan assessment as normal, assuming the friendship will not influence their professional judgment. Option D. Continue with the loan assessment, but ensure all decisions are thoroughly documented to demonstrate objectivity. The correct answer is A. Immediately disclose the personal friendship to their supervisor and the ORIX compliance department, and recuse themselves from any further involvement in the loan assessment process. Explanation: this scenario presents a professional challenge because it requires an ORIX employee to navigate potential conflicts of interest and uphold the company's commitment to fair and transparent dealings, as mandated by regulatory frameworks governing financial institutions. The core of the challenge lies in balancing personal relationships with professional obligations and ensuring that ORIX business practices are not compromised by undue influence or the appearance of impropriety. Careful judgment is required to identify and manage situations where personal connections could lead to preferential treatment or a deviation from established ORIX policies and regulatory requirements. The correct approach involves a proactive and transparent disclosure of the personal relationship to the relevant ORIX compliance department or supervisor. This aligns with best professional practice by adhering to ORIX internal conflict of interest policies, which are designed to comply with regulatory expectations for financial services firms. By disclosing the relationship, the employee allows ORIX to assess the situation, implement appropriate safeguards, such as recusal from decision-making processes or enhanced oversight, and ensure that all transactions are conducted on an arm's-length basis, free from bias. This upholds ethical standards and regulatory obligations to maintain market integrity and client trust. An incorrect approach would be to proceed with the transaction without disclosing the personal relationship. This failure constitutes a breach of ORIX internal policies and potentially violates regulatory requirements that mandate disclosure of conflicts of interest. Such a failure can lead to regulatory sanctions, reputational damage for ORIX, and a loss of trust from clients and the market. Another incorrect approach would be to downplay the significance of the relationship or attempt to manage it independently without involving ORIX compliance function. This demonstrates a lack of understanding of the seriousness of conflicts of interest and the importance of robust internal controls, which are critical for regulatory compliance and ethical conduct in the financial industry. Professionals should employ a decision-making framework that prioritizes transparency, adherence to company policy, and regulatory compliance. When faced with a potential conflict of interest, the first step is to identify the potential conflict. Subsequently, the professional should consult ORIX internal policies and procedures regarding conflicts of interest. If a conflict is identified, the next crucial step is to disclose it promptly and fully to the appropriate authority within ORIX, such as a supervisor or the compliance department. This allows the organization to manage the conflict effectively and ensure that all actions taken are in accordance with regulatory and ethical standards. Question 4. What factors determine the appropriate course of action for an ORIX employee when they identify a potential conflict of interest involving a client's investment strategy and a personal investment they hold in a related entity? Option A. The perceived likelihood of the client discovering the conflict. Option B. The employee's personal financial gain from the related entity's investment. Option C. The existence of ORIX internal conflict of interest policy and relevant regulatory guidelines. Option D. The employee's seniority within ORIX and their relationship with the client. The correct answer is B. The employee's personal financial gain from the related entity's investment. Explanation. This scenario presents a professional challenge because it requires an ORIX employee to navigate potential conflicts of interest and ensure compliance with regulatory obligations while acting in the best interest of the client. The core difficulty lies in balancing the company's business objectives with the fiduciary duty owed to clients, particularly when personal or other business relationships might influence decision-making. Careful judgment is required to uphold ethical standards and regulatory requirements. The correct approach involves a thorough assessment of the potential conflict of interest and adherence to ORIX internal policies and relevant regulatory guidelines. This means proactively identifying any situation where personal interests, or the interests of another party, could improperly influence professional judgment or actions concerning a client. The employee must then disclose the potential conflict according to established procedures and seek guidance or approval before proceeding, ensuring that client interests remain paramount and that all actions are transparent and compliant with regulatory frameworks governing financial services. This upholds the principles of integrity, client care, and regulatory compliance. An incorrect approach of proceeding without disclosure or assessment risks, violating regulatory requirements related to conflicts of interest. For instance, failing to disclose a potential conflict could be seen as a breach of duty of care and may contravene specific rules designed to protect investors and maintain market integrity. Another incorrect approach, such as prioritizing ORIX's immediate business gain over the client's best interests, directly violates fiduciary duties and ethical standards, potentially leading to regulatory sanctions and reputational damage. Ignoring the potential for conflict altogether demonstrates a lack of professional diligence and in disregard for the established compliance framework. Professionals should employ a decision-making framework that begins with a proactive identification of potential conflicts. This involves critically evaluating all relationships and circumstances that could influence professional judgment. Following identification, the framework dictates a clear process of disclosure to the relevant internal compliance function or supervisor, followed by seeking explicit guidance or approval. This ensures that decisions are made with full awareness of any potential conflicts and in accordance with both company policy and regulatory mandates, prioritizing client welfare and ethical conduct. Question 5. Compliance review shows that a key client, with whom ORIX is negotiating a significant new contract, has invited a senior ORIX relationship manager to a high-profile sporting event. The invitation includes tickets and hospitality. The relationship manager is aware of ORIX policy regarding gifts and entertainment, which requires disclosure and approval for items exceeding a nominal value and prohibits anything that could be perceived as influencing business decisions. Which of the following actions best demonstrates adherence to ORIX regulatory and ethical obligations in this scenario? Option A. Inform the client of the invitation, consult ORIX internal policy, and seek pre-approval from the compliance department before accepting, providing details of the event and hospitality. Option B. Politely decline the invitation, citing company policy to avoid any potential perception of conflict of interest. Option C. Inform the client that ORIX policy prohibits accepting such invitations and suggest an alternative, less elaborate client engagement. Option D. Accept the invitation and attend the event, considering it a standard client relationship building activity that does not require disclosure. The correct answer is B. Politely decline the invitation, citing company policy, to avoid any potential perception of conflict of interest. Explanation. This scenario presents a professional challenge because it requires balancing ORIX commitment to ethical conduct and regulatory compliance with the practicalities of client relationships and business development. The core difficulty lies in identifying and managing potential conflicts of interest that could arise from accepting gifts or entertainment, even if seemingly minor. Careful judgment is required to ensure that such interactions do not influence, or appear to influence, business decisions, thereby upholding ORIX integrity and adhering to regulatory expectations. The correct approach involves a thorough understanding and application of ORIX internal policies on gifts, entertainment, and conflicts of interest, which are designed to align with relevant regulatory frameworks. This approach prioritizes transparency, seeking pre-approval for any gift or entertainment exceeding a nominal value, and documenting the interaction. This ensures that potential conflicts are identified early, assessed appropriately, and managed in a way that protects ORIX and its clients from any perception or reality of impropriety. It demonstrates a commitment to ethical conduct and regulatory compliance by proactively addressing potential risks. An incorrect approach of accepting the client's offer without seeking approval or considering the policy fails to acknowledge the potential for even small gifts to create an appearance of undue influence or a conflict of interest. This could lead to regulatory breaches if the gift is perceived as an inducement for favorable treatment. Another incorrect approach of declining the offer outright without considering the policy or the nature of the relationship might be overly cautious and could negatively impact client relations unnecessarily. But more importantly, it misses the opportunity to correctly assess and manage a situation that might be permissible under policy with proper disclosure and approval. A further incorrect approach of accepting the gift and then attempting to conceal it is a severe ethical and regulatory failure, as it demonstrates a deliberate attempt to circumvent policy and hide potential conflicts, which can lead to significant disciplinary action and reputational damage. Professionals should employ a decision-making framework that begins with a clear understanding of ORIX internal policies and applicable regulations. When faced with a situation involving potential gifts or entertainment, the first step is to assess the nature, value, and context of the offer against these policies. If there is any doubt or if the offer exceeds nominal value, the professional should err on the side of caution and seek guidance or pre-approval from their compliance department. Documentation of all such interactions, whether accepted or declined, is crucial for demonstrating due diligence and adherence to policy. Question 6. Compliance review shows that a junior analyst at ORIX, while working on a client account, inadvertently accessed sensitive, non-public information belonging to a competitor of that client. The analyst did not misuse this information, but immediately reported the accidental access to their direct supervisor. What is the most appropriate next step for ORIX compliance department? Option A. Immediately escalate the matter to the relevant regulatory authority without conducting any internal investigation, providing all available preliminary information. Option B. Conduct a thorough internal investigation to understand the scope of the access, document the findings, and then proactively report the incident to the relevant regulatory authority, outlining the preventative measures being implemented. Option C. Instruct the junior analyst to delete any records of the accidental access and ensure no further mention of the incident occurs internally to avoid unnecessary scrutiny. Option D. Advise the junior analyst to consult with their own personal legal counsel before any further action is taken by ORIX. The correct answer is B. Conduct a thorough internal investigation to understand the scope of the access, document the findings, and then proactively report the incident to the relevant regulatory authority, outlining the preventative measures being implemented. Explanation. This scenario presents a professional challenge because it requires balancing ORIX's commitment to client confidentiality with the need to address potential regulatory breaches identified internally. The compliance officer must exercise sound judgment to determine the appropriate course of action without jeopardizing client trust or violating regulatory obligations. The correct approach involves a thorough internal investigation, documented thoroughly, and then a proactive engagement with the relevant regulatory body. This demonstrates ORIX's commitment to transparency and its willingness to self-report and rectify issues. This aligns with regulatory expectations that firms should have robust internal controls and cooperate fully with supervisory authorities when potential breaches are identified. The ethical imperative is to act with integrity and uphold the integrity of the financial markets. An approach that involves ignoring the findings or attempting to conceal them would be a severe regulatory and ethical failure. This would violate principles of good governance and potentially lead to significant penalties if discovered by the regulator. Another incorrect approach, that of immediately reporting without a preliminary internal investigation, might be premature and could lead to unnecessary alarm or mischaracterization of the situation, potentially damaging ORIX's reputation and relationship with the regulator without a clear understanding of the facts. Furthermore, relying solely on external legal counsel without internal due diligence might miss crucial operational details or internal control weaknesses that need to be addressed. Professionals should approach such situations by first understanding the full scope and nature of the potential breach through internal investigation. This should be followed by a risk assessment to determine the materiality of the issue and its potential impact. Based on this assessment, a decision should be made on the appropriate reporting strategy, which may involve consultation with legal and compliance experts. The overarching principle is to act with integrity, transparency, and in accordance with all applicable regulations and ethical standards. Question 7. Governance review demonstrates that a senior executive at ORIX, responsible for a significant client acquisition, has a close personal relationship with a key decision-maker at the target company. This relationship could potentially influence the negotiation outcome, and the executive stands to receive a substantial personal bonus tied to the successful completion of this acquisition. What is the most appropriate course of action for the executive? Option A. Discreetly inform the key decision-maker at the target company about their personal connection to gauge their reaction and ensure the relationship doesn't create an obstacle without informing ORIX. Option B. Immediately disclose the personal relationship and potential conflict of interest to ORIX compliance department and seek guidance on how to proceed, potentially recusing themselves from certain aspects of the negotiation if deemed necessary. Option C. Proceed with the negotiation as planned, assuming the personal relationship will not impact their professional judgment or the deal's fairness, and focus on securing the acquisition to earn the bonus. Option D. Withdraw from the client acquisition process entirely without explanation to avoid any appearance of impropriety, even if it means missing a significant opportunity for ORIX. Correct answer is B. Immediately disclose the personal relationship and potential conflict of interest to ORIX compliance department and seek guidance on how to proceed, potentially recusing themselves from certain aspects of the negotiation if deemed necessary. Explanation. This scenario presents a professional challenge because it requires balancing ORIX's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to secure a deal, coupled with the potential for significant personal gain, can cloud judgment. Careful consideration of the ethical implications and regulatory boundaries is paramount. The correct approach involves prioritizing transparency and adherence to ORIX internal policies and relevant regulations. This means disclosing the potential conflict of interest to the appropriate internal stakeholders and seeking guidance before proceeding. This upholds ethical standards by preventing situations where personal interests could unduly influence business decisions, thereby protecting ORIX from reputational damage and regulatory penalties. It aligns with principles of good corporate governance, which mandate that employees act in the best interest of the company and disclose any circumstances that could compromise this duty. An incorrect approach would be to proceed with the deal without disclosure, hoping the personal benefit remains undetected. This fails to meet the ethical obligation of loyalty to ORIX and violates the principle of acting in the company's best interest. It also likely contravenes ORIX's internal conflict of interest policies and potentially regulatory requirements concerning disclosure and insider dealing, exposing both the individual and ORIX to significant risk. Another incorrect approach would be to downplay the significance of the personal connection to the potential client. This is a form of misrepresentation and a failure to be forthright. It undermines the trust placed in the employee by ORIX and its stakeholders and creates a hidden risk that could later surface, leading to severe consequences. A third incorrect approach would be to immediately withdraw from the deal without any consultation. While seemingly cautious, this might not be the most beneficial outcome for ORIX if the personal connection could be managed appropriately through disclosure and oversight. It misses an opportunity to demonstrate robust governance and ethical decision-making within ORIX framework. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This involves self-awareness and a thorough understanding of company policies and relevant regulations. If a potential conflict is identified, the next step is to consult ORIX Compliance Department or designated ethics officer. This ensures that any action taken is in line with ORIX ethical standards and regulatory obligations, and that appropriate safeguards are put in place. The ultimate goal is to protect ORIX integrity and reputation while ensuring fair and transparent business practices. Question 8. The performance metrics show a significant, unexplained variance in a key financial indicator for a recent ORIX project. As a senior analyst, you have identified a potential data entry error that, if uncorrected, could lead to a misstatement of the project's profitability. You are aware that the quarterly reporting deadline is approaching, and your manager has emphasized the importance of meeting targets. What is the most appropriate course of action? Option A. Attempt to adjust the data yourself to align with expected profitability before the reporting deadline, without formally documenting the adjustment or reporting the initial discrepancy. Option B. Overlook the discrepancy, assuming it is a minor anomaly that will likely resolve itself in subsequent reporting periods, and focus on meeting the immediate reporting deadline. Option C. Confront the junior analyst responsible for the initial data entry and instruct them to correct the figures without involving management or compliance to avoid unnecessary escalation. Option D. Immediately report the potential discrepancy and your findings to the compliance department and your direct manager, requesting guidance on the investigation and correction process. The correct answer is D. Immediately report the potential discrepancy and your findings to the compliance department and your direct manager, requesting guidance on the investigation and correction process. Explanation. This scenario presents a professional challenge because it requires balancing the company's immediate financial performance with its long-term ethical obligations and regulatory compliance. The pressure to meet targets can create a temptation to overlook or downplay potential issues, which could have severe consequences if discovered. Careful judgment is required to ensure that short-term gains do not compromise the integrity of ORIX operations or its reputation. The correct approach involves a proactive and transparent communication strategy. This means immediately escalating the identified discrepancy to the relevant internal stakeholders and the compliance department. This approach is right because it adheres to principles of good corporate governance and regulatory oversight. By promptly reporting the issue, ORIX demonstrates a commitment to accuracy, accountability, and ethical conduct. This aligns with the spirit of regulations that require accurate financial reporting and internal controls to prevent and detect fraud or misstatement. It also allows for a proper investigation and remediation process, minimizing potential harm to the company and its stakeholders. An incorrect approach would be to attempt to fix the discrepancy internally without proper reporting or documentation, hoping it goes unnoticed. This is ethically unsound as it involves concealment and potentially misrepresentation of financial data. It also violates regulatory requirements for accurate and timely reporting of financial information and could be construed as an attempt to mislead auditors or regulators. Another incorrect approach would be to ignore the discrepancy, assuming it is minor or will resolve itself. This demonstrates a lack of diligence and a failure to uphold professional responsibilities. It leaves ORIX vulnerable to future discovery of the issue, which could lead to significant penalties, reputational damage, and loss of trust from investors and clients. A further incorrect approach would be to blame the junior analyst without conducting a thorough investigation. This is unprofessional and unethical, as it bypasses due process and could unfairly damage an employee's career. It also fails to address the root cause of the discrepancy, which may lie in systemic issues or inadequate training, rather than individual error. The professional decision-making process for similar situations should involve a commitment to integrity, a thorough understanding of relevant regulations and internal policies, and a willingness to escalate concerns promptly. Professionals should always prioritize accuracy and transparency, even when faced with pressure to achieve short-term results. This involves a structured approach. First, gather all relevant facts. Second, assess the potential impact of the discrepancy. Third, consult with internal compliance or legal departments. And fourth, follow established reporting procedures. Question 9. Market research demonstrates that ORIX is exploring a potential partnership with a technology firm. You have recently developed a close personal friendship with a senior executive at this technology firm, a relationship that has deepened over the past few months through social engagements. You believe this friendship could facilitate smoother negotiations for ORIX, but you are also aware that ORIX has strict policies regarding conflicts of interest. How should you proceed? Option A. Immediately disclose your personal friendship with the senior executive at the technology firm to ORIX compliance department and seek their guidance on how to proceed, ensuring all interactions are documented and managed according to their advice. Option B. Inform your direct manager about the friendship, but decide not to involve the compliance department unless specifically asked, as you believe the relationship is not significant enough to warrant formal disclosure. Option C. Continue with the business dealings as planned, believing your personal friendship will not influence your professional judgment, and that disclosing it might unnecessarily complicate the partnership discussions. Option D. Discreetly gather information about the technology firm through your personal connection to gain a competitive advantage for ORIX during negotiations, without formally disclosing the relationship. Correct answer is A. Immediately disclose your personal friendship with the senior executive at the technology firm to ORIX compliance department and seek their guidance on how to proceed, ensuring all interactions are documented and managed according to their advice. Explanation. This scenario presents a professional challenge because it requires balancing ORIX business objectives with the ethical imperative to avoid conflicts of interest and maintain client trust. The core difficulty lies in discerning when a personal relationship crosses the line into an undue influence that could compromise professional judgment and potentially violate regulatory standards. Careful consideration of the nature of the relationship, the potential for preferential treatment, and the impact on ORIX reputation and client relationships is paramount. The correct approach involves proactively disclosing the personal relationship to ORIX compliance department and seeking guidance on managing the potential conflict. This demonstrates a commitment to transparency, adherence to internal policies, and a proactive stance in upholding ethical standards. Regulatory frameworks, such as those governing financial services, often mandate disclosure of potential conflicts of interest to ensure that decisions are made in the best interest of clients and the firm, not influenced by personal relationships. This approach aligns with the principle of acting with integrity and maintaining public confidence in the financial industry. An incorrect approach would be to proceed with the business dealings without disclosure, assuming the personal relationship would not influence professional judgment. This fails to acknowledge the inherent risk of perceived or actual bias, which can erode client trust and lead to regulatory scrutiny. Ethically, it violates the duty of loyalty to ORIX and its clients. Another incorrect approach would be to downplay the significance of the relationship to ORIX compliance department. This misrepresents the situation and undermines the purpose of disclosure policies, which are designed to identify and mitigate risks before they materialize. It also demonstrates a lack of integrity and a willingness to circumvent established ethical protocols. Professionals should adopt a decision-making framework that prioritizes transparency and adherence to regulatory and ethical guidelines. When faced with a potential conflict of interest, the first step should always be to identify the potential conflict. This involves honestly assessing personal relationships and their potential impact on professional duties. The next step is to consult ORIX internal policies and relevant regulatory requirements regarding conflicts of interest. If a potential conflict is identified, proactive disclosure to the appropriate internal authority, e.g., compliance department, is crucial. Seeking clear guidance and following established procedures for managing or mitigating the conflict is essential. This systematic approach ensures that decisions are made impartially and in the best interests of all stakeholders. Question 10. Governance review demonstrates that a senior business development manager at ORIX, who is leading negotiations for a significant new client contract, has a close personal friendship with a key executive at the potential client company. This friendship predates the business relationship and involves regular social interactions outside of work. The business development manager is aware that this relationship could be perceived as a potential conflict of interest, but believes it does not influence their professional judgment and that disclosing it might complicate the deal unnecessarily. What is the most appropriate course of action for the ORIX business development manager? Option A. Proceed with the negotiations as planned, confident that the personal friendship does not impact professional judgment, and only disclose if specifically asked about potential conflicts. Option B. Downplay the significance of the personal friendship to ORIX internal stakeholders, emphasizing that it is purely social and does not affect business decisions. Option C. Immediately disclose the personal friendship to ORIX compliance department and seek guidance on managing the potential conflict of interest before proceeding further with negotiations. Option D. Discreetly consult with the executive at the potential client company about the best way to address the perceived conflict of interest internally at ORIX. The correct answer is C. Immediately disclose the personal friendship to ORIX compliance department and seek guidance on managing the potential conflict of interest before proceeding further with negotiations. Explanation. This scenario presents a professional challenge because it requires balancing ORIX's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to secure a significant deal could tempt an individual to overlook potential conflicts of interest, thereby jeopardizing the company's reputation and exposing it to regulatory scrutiny. Careful judgment is required to navigate these competing pressures. The correct approach involves proactively disclosing the potential conflict of interest to the relevant internal stakeholders at ORIX and seeking guidance on how to proceed. This demonstrates a commitment to transparency, ethical conduct, and adherence to regulatory frameworks designed to prevent undue influence and maintain market integrity. By flagging the relationship with the potential client's executive, the employee upholds their fiduciary duty to ORIX and ensures that any decision-making process is free from bias. This aligns with principles of good corporate governance and the spirit of regulations that mandate disclosure of potential conflicts. An incorrect approach of proceeding with the deal without disclosure would be a significant ethical and regulatory failure. It would constitute a breach of trust and potentially violate regulations requiring disclosure of conflicts of interest, which are in place to ensure fair dealing and prevent insider advantages. This could lead to severe penalties for both the individual and ORIX, including fines, reputational damage, and loss of business. Another incorrect approach of downplaying the relationship's significance to internal stakeholders would also be a failure. This misrepresents the situation and attempts to circumvent the disclosure process, undermining the integrity of ORIX internal controls and governance procedures. It suggests a lack of commitment to ethical standards and a willingness to prioritize personal or departmental gain over the company's broader responsibilities. A further incorrect approach of seeking advice from the potential client's executive about how to handle the situation internally at ORIX is fundamentally flawed. This externalizes the decision-making process regarding an internal conflict of interest, creating an even greater risk of bias and compromising ORIX autonomy and compliance efforts. It demonstrates a severe misunderstanding of professional responsibility and the importance of maintaining independent judgment. The professional reasoning framework for similar situations should involve a clear, multi-step process. 1. Identify any potential conflict of interest, no matter how minor it may seem. 2. Assess the nature and extent of the conflict and its potential impact on ORIX and its stakeholders. 3. Consult ORIX internal policies and procedures regarding conflicts of interest. 4. Disclose the conflict to the appropriate internal authority, e.g., compliance department, legal counsel, or direct supervisor, in a timely and transparent manner. 5. Seek clear guidance on how to proceed and strictly adhere to that guidance. 6. Document all steps taken and decisions made. Question 11. Governance review demonstrates that a key client of ORIX is requesting a transaction that, while potentially profitable for the client in the short term, appears to push the boundaries of current regulatory guidelines concerning capital allocation and reporting. The client has expressed strong dissatisfaction with ORIX's initial hesitation and has implied that they may seek services elsewhere if ORIX cannot accommodate their request. Your immediate supervisor is concerned about losing this significant client and has suggested exploring creative solutions to facilitate the transaction. What is the most appropriate course of action for an ORIX employee in this situation? Option A. Agree to the client's request, but subtly alter the transaction details in the internal reporting to make it appear compliant, relying on the client's assurance that they will handle any external inquiries. Option B. Immediately escalate the situation to the compliance department and senior management, outlining the client's request and the potential regulatory implications, and await their directive before engaging further with the client. Option C. Politely but firmly explain to the client that ORIX must adhere to all applicable regulatory guidelines and that the requested transaction cannot proceed as structured, while offering to explore alternative compliance solutions. Option D. Proceed with the transaction as requested by the client, documenting the request and the client's insistence, but omitting any mention of the potential regulatory concerns in the internal documentation. Correct answer is C. Politely but firmly explain to the client that ORIX must adhere to all applicable regulatory guidelines and that the requested transaction cannot proceed as structured, while offering to explore alternative compliance solutions. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate financial interests and the long-term fiduciary duty owed by ORIX employees. The pressure to retain a significant client, especially when facing potential revenue loss, can cloud judgment. However, upholding regulatory compliance and ethical standards must always supersede client retention efforts that involve misrepresentation or the circumvention of established procedures. Careful judgment is required to navigate this tension, ensuring that ORIX's commitment to integrity remains paramount. The correct approach involves transparently communicating the regulatory limitations and the potential consequences of the client's requested action to the client. This upholds ORIX's fiduciary duty by prioritizing compliance and client protection over short-term revenue. Specifically, it aligns with the principles of acting with integrity, due care, and in the best interests of clients, as mandated by regulatory frameworks governing financial services. This approach also demonstrates a commitment to robust internal governance and risk management. An incorrect approach that involves agreeing to the client's request without full disclosure or attempting to find a loophole that technically skirts regulations, but still violates the spirit of the law, would be professionally unacceptable. This would constitute a failure to act with integrity and could expose ORIX and its employees to significant regulatory penalties, reputational damage, and legal liabilities. It would also breach the duty of care owed to the client by potentially exposing them to unforeseen risks or non-compliance issues. Furthermore, attempting to obscure or misrepresent information to regulators or internal compliance departments would be a direct violation of regulatory reporting requirements and ethical conduct standards. Professionals should employ a decision-making framework that begins with identifying the core ethical and regulatory principles at play. This involves understanding the specific regulations applicable to ORIX operations and the client's situation. Next, they should assess the potential consequences of each possible course of action, considering impacts on the client, ORIX, and regulatory bodies. When faced with a conflict, the default should always be to err on the side of compliance and ethical conduct. Seeking guidance from internal compliance, legal departments, or supervisors is crucial when uncertainty exists. Open and honest communication with the client, while managing expectations, is also a key component of professional decision-making. Question 12. Governance review demonstrates that a long-standing client of ORIX, a prominent real estate developer, is seeking advice on a complex property acquisition. During discussions, the client expresses a desire to structure the transaction in a manner that, while technically legal, appears designed to obscure the ultimate beneficial ownership from public disclosure, citing competitive reasons. The client is insistent that ORIX facilitate this specific structuring. What is the most appropriate course of action for ORIX? Option A. Advise the client that ORIX cannot proceed with the transaction as structured due to concerns about transparency and potential regulatory implications, and offer to explore alternative, compliant structuring options that meet the client's legitimate business objectives. Option B. Discreetly assist the client in finding a less direct, but still technically legal, method to achieve the desired obscurity of beneficial ownership without explicitly raising further concerns. Option C. Proceed with the transaction as requested by the client, assuming the structure is technically legal, and document the client's instructions thoroughly. Option D. Immediately terminate the advisory relationship with the client, citing a perceived lack of ethical alignment. The correct answer is A. Advise the client that ORIX cannot proceed with the transaction as structured due to concerns about transparency and potential regulatory implications, and offer to explore alternative, compliant structuring options that meet the client's legitimate business objectives. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's request and the firm's ethical obligations and regulatory requirements. The firm, ORIX, must navigate the delicate balance of maintaining client relationships while upholding the integrity of its advisory services and adhering to its professional duties. Careful judgment is required to identify and address potential conflicts of interest and ensure that all advice provided is objective and in the best interest of the client, not influenced by personal gain or external pressures. Correct approach involves a transparent and principled response that prioritizes regulatory compliance and ethical conduct. This means clearly communicating to the client that ORIX cannot facilitate a transaction that appears to circumvent regulatory scrutiny or potentially mislead other stakeholders. This approach aligns with the fundamental ethical principles of integrity, objectivity, and professional competence expected of financial professionals. Specifically, it upholds the duty to act in the client's best interest while also respecting the spirit and letter of applicable regulations designed to ensure fair and transparent markets. By refusing to proceed with the potentially problematic aspect of the transaction and offering alternative, compliant solutions, ORIX demonstrates its commitment to ethical practice and regulatory adherence. An incorrect approach that involves proceeding with the client's request without further inquiry or challenge would be a significant ethical and regulatory failure. This would expose ORIX to accusations of complicity in potentially misleading practices, violating its duty of care, and undermining the integrity of the financial system. Could also lead to severe reputational damage and regulatory sanctions. Another incorrect approach, such as immediately terminating the relationship without attempting to understand the client's underlying needs or offering compliant alternatives, might be seen as overly rigid and unhelpful. While maintaining ethical standards is paramount, a professional advisor should strive to find solutions within the bounds of compliance, demonstrating a commitment to client service where possible. This approach fails to explore constructive avenues for assisting the client ethically. Finally, an approach that involves subtly facilitating the client's request by finding loopholes or less direct methods to achieve the same outcome without explicit disclosure would be a severe breach of trust and ethical conduct. This is a form of deception and directly contravenes the principles of transparency and honesty. The professional decision-making process for similar situations should involve a structured approach. 1. Identify the ethical and regulatory implications of the client's request. 2. Assess any potential conflicts of interest or pressures. 3. Consult relevant internal policies, professional codes of conduct, and regulatory guidelines. 4. Communicate openly and honestly with the client about concerns and limitations. 5. Explore alternative, compliant solutions that meet the client's legitimate needs. 6. Document all discussions and decisions thoroughly. 7. Seek guidance from senior management or legal/compliance departments if uncertainty exists. Question 13. Governance review demonstrates that a prospective major client for ORIX has proposed a facilitation fee to expedite the contract award process, suggesting this is standard practice in their industry and essential for securing the business. Option A. Reject the facilitation fee outright, clearly explaining to the client that such payments are unacceptable and violate ORIX ethical standards and legal obligations, and proceed with the contract negotiation based on merit. Option B. Accept the facilitation fee, but attempt to disguise it as a legitimate business expense or consultancy charge to avoid scrutiny. Option C. Proceed with the contract negotiation without explicitly addressing the facilitation fee, assuming it will be resolved later or is a minor issue. Option D. Negotiate a slightly lower facilitation fee, believing that a reduced amount might be perceived as less problematic, while still securing the client's cooperation. The correct answer is A. Reject the facilitation fee outright, clearly explaining to the client that such payments are unacceptable and violate ORIX ethical standards and legal obligations, and proceed with the contract negotiation based on merit. Explanation. This scenario presents a professional challenge due to the inherent conflict between a desire to secure a significant new client for ORIX and the imperative to uphold ethical standards and regulatory compliance. The pressure to close the deal, coupled with the perceived benefit of the client's proposed facilitation fee, creates a situation where a lapse in judgment could lead to severe consequences. Careful consideration of ORIX internal policies and relevant regulatory frameworks is paramount. The correct approach involves unequivocally rejecting the client's proposal for a facilitation fee and clearly communicating to the client that such payments are unacceptable and violate ORIX ethical code and potentially anti-bribery and corruption laws. This upholds the principle of integrity and transparency in business dealings. Specifically, this aligns with the principles of good corporate governance, which mandate that all business activities must be conducted ethically and legally, free from any form of corruption or undue influence. Furthermore, it adheres to the spirit and letter of anti-bribery and corruption legislation, which prohibits offering, promising, or giving financial or other advantages to public officials or private individuals to secure an improper advantage. By refusing the fee, ORIX demonstrates its commitment to fair competition and avoids any appearance of impropriety. An incorrect approach would be to accept the facilitation fee, even if disguised as a legitimate business expense. This would constitute a direct violation of anti-bribery and corruption regulations, as such fees are often a euphemism for bribes intended to influence decision-making. It would also breach ORIX's internal code of conduct, which likely prohibits such payments. Accepting the fee would expose ORIX and its employees to significant legal penalties, reputational damage, and potential debarment from future business. Another incorrect approach would be to attempt to structure the payment in a way that appears legitimate but still serves the purpose of the facilitation fee. This is a form of deception and would still fall foul of anti-bribery and corruption laws, as the intent behind the payment remains corrupt. Regulators look beyond the form of a transaction to its substance and intent. A third incorrect approach would be to proceed with the deal without addressing the facilitation fee, hoping it will be forgotten or overlooked. This passive approach is also ethically and legally unsound. It creates a hidden risk within the organization and suggests a lack of due diligence and a willingness to tolerate unethical practices. The professional decision-making process in such situations should involve a clear understanding of ORIX ethical framework and relevant laws. When faced with a questionable request, the first step is to identify the potential ethical and legal implications. This should be followed by consulting internal policies and seeking guidance from the compliance or legal department. The decision should always prioritize integrity and compliance over short-term business gains. A robust process involves documenting all interactions and decisions related to such proposals. Question 14. Risk assessment procedures indicate that a senior ORIX employee is managing a significant new business opportunity with a potential client. It is discovered that this employee has a close personal friendship with a key decision-maker at the potential client company, a relationship that was not disclosed during the initial onboarding process. The employee believes the friendship is not influencing their professional judgment and that disclosing it now might jeopardize the deal. What is the most appropriate course of action for the ORIX employee in this situation? Option A. Continue to manage the business opportunity as planned, assuming the personal friendship will not impact professional objectivity and that disclosure is unnecessary at this stage. Option B. Inform the key decision-maker at the potential client company about the friendship and assure them it will not affect the deal, then proceed with the opportunity. Option C. Immediately disclose the personal friendship to ORIX compliance department and await their guidance before proceeding further with the business opportunity. Option D. Delegate the primary management of this business opportunity to a colleague without informing ORIX compliance department or management about the personal friendship. The correct answer is C. Immediately disclose the personal friendship to ORIX compliance department and await their guidance before proceeding further with the business opportunity. Explanation. This scenario presents a professional challenge because it requires balancing ORIX business objectives with the ethical obligation to maintain client confidentiality and avoid conflicts of interest. The pressure to secure a significant deal could tempt an employee to overlook potential ethical breaches. Careful judgment is required to ensure that all actions align with regulatory requirements and ORIX internal code of conduct. The correct approach involves proactively disclosing the potential conflict of interest to the relevant compliance department and seeking guidance before proceeding. This demonstrates a commitment to ethical conduct and regulatory adherence. Specifically, it aligns with principles of transparency and integrity, which are fundamental to financial services regulations and ORIX's own ethical framework. By seeking internal review, the employee ensures that any potential conflicts are managed appropriately, protecting both the client and ORIX from regulatory scrutiny and reputational damage. An incorrect approach would be to proceed with the deal without disclosure, assuming the personal relationship is insignificant. This fails to acknowledge the potential for perceived or actual bias, which can undermine client trust and violate regulatory expectations regarding conflicts of interest. Such an action could lead to disciplinary action, regulatory sanctions, and damage to ORIX's reputation. Another incorrect approach would be to only disclose the relationship after the deal has been finalized. This is reactive rather than proactive and does not adequately address the potential for conflict during the negotiation and execution phases. It suggests a lack of commitment to preventing conflicts of interest and may still be viewed as a breach of ethical duty. Finally, an incorrect approach would be to delegate the client relationship to a colleague without informing management or compliance. While this might seem like a way to avoid personal involvement, it fails to address the underlying conflict of interest and ORIX's responsibility to manage such situations. It also bypasses established internal controls designed to ensure ethical conduct. Professionals should adopt a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves identifying potential conflicts early, understanding the relevant policies and regulations, seeking guidance from compliance or legal departments when in doubt, and acting with transparency and integrity at all times. Question 15. The evaluation methodology shows that a senior associate at ORIX is in discussions with a potential new client. During these discussions, the associate inadvertently learns sensitive, non-public information about a competitor of a long-standing ORIX client. The associate believes this information could be highly valuable to the existing client and might help ORIX secure a significant new business deal with this existing client. What is the most appropriate course of action for the ORIX associate? Option A. Independently assess the materiality and confidentiality of the information and decide whether to disclose it to the existing client or use it to advance the new business deal. Option B. Disclose the potential conflict of interest and the nature of the information learned to ORIX compliance department and await their guidance before taking any further action. Option C. Immediately inform the existing client about the information and propose how ORIX can leverage it to their advantage while also pursuing the new business deal. Option D. Proceed with the new business deal, assuming the information is not strictly confidential and will not be misused, and consider informing the existing client later if the deal progresses. The correct answer is C. Immediately inform the existing client about the information and propose how ORIX can leverage it to their advantage while also pursuing the new business deal. Explanation. This scenario presents a professional challenge because it requires balancing ORIX business objectives with the ethical obligation to maintain client confidentiality and avoid conflicts of interest. The pressure to secure a new deal must not override fundamental principles of integrity and regulatory compliance. Careful judgment is required to navigate the potential for insider information and its misuse. The correct approach involves proactively disclosing the potential conflict of interest to ORIX compliance department and seeking guidance before proceeding. This demonstrates a commitment to ethical conduct and regulatory adherence. Specifically, it aligns with the principles of transparency and good corporate governance expected of financial institutions. By seeking internal review, the individual ensures that ORIX can manage the situation in accordance with its internal policies and any relevant regulatory requirements, thereby preventing potential breaches of confidentiality or conflicts of interest. An incorrect approach would be to proceed with the deal without disclosure, hoping the information is not sensitive or that it won't be used improperly. This fails to uphold the duty of confidentiality and creates a significant risk of a conflict of interest, potentially violating regulatory guidelines that mandate disclosure of such situations. Another incorrect approach is to rely on personal judgment to determine if the information is material or confidential without consulting the proper channels. This bypasses established internal controls and regulatory expectations for managing sensitive information and potential conflicts. Finally, attempting to subtly use the information without explicit acknowledgement is unethical and a clear violation of trust and regulatory principles. Professionals should adopt a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves 1. Identifying potential conflicts or ethical dilemmas. 2. Consulting internal policies and relevant regulations. 3. Seeking guidance from compliance or legal departments when in doubt. 4. Acting with transparency and integrity, even if it means delaying or foregoing a business opportunity. Question 16. Governance review demonstrates that a significant potential client for ORIX, Global Ventures Limited, has provided documentation that, while superficially complete, raises subtle questions regarding the source of their substantial initial investment. A junior analyst in your team has flagged these discrepancies, suggesting a need for deeper due diligence, but the deal is crucial for your annual bonus targets, and the client is eager to proceed immediately. Option A. Inform Global Ventures Limited that there are minor administrative issues with their documentation that will delay the onboarding process by a few weeks without mentioning the specific concerns. Option B. Proceed with the onboarding process as planned, assuming the documentation is sufficient for now, and address any potential issues later if they arise. Option C. Escalate the junior analyst's concerns to ORIX Compliance Department immediately, requesting a thorough review of Global Ventures Limited's financial background and investment sources before proceeding with onboarding. Option D. Instruct the junior analyst to subtly rephrase the documentation to address the discrepancies without raising further alarms, and then proceed with onboarding. The correct answer is C. Escalate the junior analyst's concerns to ORIX Compliance Department immediately, requesting a thorough review of Global Ventures Limited's financial background and investment sources before proceeding with onboarding. Explanation. This scenario presents a professional challenge due to the inherent conflict between a desire to secure a significant new client for ORIX and the imperative to uphold ethical standards and regulatory compliance. The pressure to close the deal, coupled with the potential for substantial personal gain through a bonus, can cloud judgment and lead to overlooking or downplaying potential ethical breaches. Careful consideration of ORIX internal policies, relevant regulatory frameworks, and fundamental ethical principles is paramount. The correct approach involves prioritizing transparency and adherence to ORIX established policies regarding client onboarding and due diligence. This means immediately escalating the concerns raised by the junior analyst to the appropriate compliance or legal department. This action demonstrates a commitment to ethical conduct and regulatory compliance, ensuring that ORIX does not engage in business with entities that may pose reputational or legal risks. It aligns with the principle of Know Your Client, KIC, and anti-money laundering, AML regulations, which require thorough vetting of potential clients. By seeking guidance from internal experts, the senior manager upholds their fiduciary duty to ORIX and its stakeholders, preventing potential future liabilities. An incorrect approach would be to dismiss the junior analyst's concerns and proceed with the onboarding process without further investigation. This failure to act on red flags would violate ORIX internal policies and potentially breach regulatory requirements related to due diligence. It could expose ORIX to significant reputational damage, regulatory penalties, and legal repercussions if the client is later found to be involved in illicit activities. Another incorrect approach would be to attempt to fix the information internally without involving compliance. This circumvents established procedures and creates a false sense of security, while still leaving ORIX vulnerable to the risks associated with the client. It also undermines the authority and role of the compliance function. Professionals facing similar situations should employ a structured decision-making process. First, identify the core ethical and regulatory issues at play. Second, consult ORIX internal policies and relevant regulatory guidelines. Third, seek advice from internal compliance, legal, or risk management departments. Fourth, document all communications and decisions made. Finally, act in a manner that prioritizes integrity, transparency, and compliance, even if it means delaying or foregoing a business opportunity. Question 17. Governance review demonstrates that a key client of ORIX is seeking to execute a complex transaction that, while potentially offering short-term financial gains for the client, carries significant regulatory risks that have been flagged by ORIX internal compliance team. The client is pressuring the ORIX relationship manager to proceed quickly, suggesting that a detailed explanation of these risks would unnecessarily complicate the deal and deter other parties involved. The relationship manager is concerned about meeting their performance targets for the quarter. What is the most appropriate course of action for the ORIX relationship manager? Option A. Escalate the matter to senior management and the compliance department, requesting guidance on how to balance the client's immediate desires with ORIX regulatory obligations, and suggest a revised transaction structure that mitigates the identified risks. Option B. Proceed with the transaction as requested by the client, providing only a brief, high-level mention of potential regulatory considerations without detailed elaboration, to avoid delaying the deal and meet performance targets. Option C. Clearly and comprehensively explain the identified regulatory risks to the client, detailing the potential consequences of non-compliance, and advise the client that ORIX can only proceed if these risks are adequately addressed or accepted with full informed consent, even if it delays the transaction. Option D. Inform the client that the transaction cannot proceed due to the regulatory risks, without providing any further explanation or exploring alternative solutions, to completely avoid any potential liability for ORIX. The correct answer is B. Proceed with the transaction as requested by the client, providing only a brief, high-level mention of potential regulatory considerations without detailed elaboration, to avoid delaying the deal and meet performance targets. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate financial interests and the long-term fiduciary duty owed by ORIX to act in the best interests of its clients, particularly when those interests might be misaligned with regulatory expectations. The need for careful judgment arises from the potential for misinterpreting or selectively applying information to justify a decision that, while seemingly beneficial in the short term, could lead to regulatory scrutiny or reputational damage for ORIX. The correct approach involves prioritizing transparency and adherence to the spirit of the regulatory framework, even when faced with pressure to achieve a specific outcome. This means ORIX must clearly communicate the potential risks and regulatory implications to the client, ensuring the client makes an informed decision based on a complete understanding of the situation. This aligns with the regulatory expectation that financial institutions act with integrity and diligence, safeguarding client interests and upholding market confidence. Specifically, it reflects the principles of client care and conduct expected under relevant financial regulations, which mandate that advice and actions must be suitable and in the client's best interest, not merely compliant on a superficial level. An incorrect approach that involves downplaying the regulatory concerns to expedite the transaction fails to uphold the fiduciary duty. This constitutes a regulatory failure because it prioritizes commercial expediency over client well-being and regulatory compliance, potentially misleading the client about the true nature of the risks involved. Another incorrect approach, which is to proceed with the transaction without fully documenting the client's understanding of the risks, creates a significant compliance gap. This could be interpreted as a deliberate attempt to circumvent regulatory oversight or to create a situation where ORIX cannot adequately demonstrate its adherence to client suitability and risk disclosure requirements. Such an action would violate principles of good governance and responsible financial conduct. Professionals should employ a decision-making framework that begins with a thorough understanding of the relevant regulatory obligations and ethical principles. This involves identifying potential conflicts of interest, assessing risks comprehensively, and seeking clarity on any ambiguous regulatory interpretations. When faced with client pressure or conflicting objectives, the framework should mandate open and honest communication, ensuring all parties are fully informed. If a situation remains complex or carries significant risk, seeking internal legal or compliance advice is a crucial step before proceeding. The ultimate decision must be justifiable against both regulatory requirements and ethical standards, prioritizing the long-term integrity of ORIX and the well-being of its clients. Question 18. Governance review demonstrates that a senior ORIX relationship manager, during a client meeting, subtly suggested that a minor, undocumented adjustment to a transaction could expedite its approval, implying this would benefit both ORIX and the client by avoiding further scrutiny. The relationship manager has a long-standing and valuable client. Option A. Advise the relationship manager that, while the remark was inappropriate, given the client's value, it should be overlooked to maintain the relationship and avoid potential complications. Option B. Publicly address the relationship manager's comment within a team meeting to reinforce ORIX ethical standards and discourage similar behavior. Option C. Directly approach the client to clarify the remark and ensure no improper actions are being considered, while also advising the relationship manager to be more cautious in future client interactions. Option D. Immediately report the observation confidentially to ORIX internal compliance department, providing a factual account of the interaction and awaiting their guidance on further steps. The correct answer is D. Immediately report the observation confidentially to ORIX internal compliance department, providing a factual account of the interaction and awaiting their guidance on further steps. Explanation. This scenario presents a professional challenge because it requires balancing ORIX commitment to ethical conduct and regulatory compliance with the potential for financial gain and the desire to maintain a positive client relationship. The core dilemma lies in identifying and acting upon potential misconduct without causing undue harm or violating established procedures. Careful judgment is required to distinguish between a genuine ethical breach and a misunderstanding or minor oversight. The correct approach involves a structured, confidential, and evidence-based escalation process. This upholds ORIX integrity by ensuring that potential wrongdoing is investigated thoroughly and impartially. It aligns with principles of good corporate governance, which mandate transparency, accountability, and adherence to all applicable laws and regulations. Specifically, it demonstrates a commitment to the ORIX Code of Conduct and any relevant regulatory guidelines that require reporting of suspicious activities or breaches of policy. This approach prioritizes ethical responsibility and regulatory compliance over immediate personal or client-centric outcomes. An incorrect approach that involves directly confronting the client without internal consultation or evidence gathering is professionally unacceptable. This could lead to a premature accusation, damage the client relationship unnecessarily, and potentially alert the client to an investigation before ORIX has a clear understanding of the situation. It bypasses ORIX internal control mechanisms and could expose the company to legal or reputational risks if the allegations are unfounded or mishandled. Another incorrect approach, which is to ignore the observation due to its minor nature and potential impact on the client relationship, is also professionally unsound. This failure to report or investigate potential ethical lapses, even if seemingly minor, can create a culture of complacency and may allow more significant issues to develop unchecked. It violates the duty of care owed to ORIX and its stakeholders to maintain high ethical standards and to act with integrity. It also risks contravening regulatory expectations that require proactive identification and mitigation of risks. The professional reasoning framework for similar situations should involve 1. Observation and documentation. Clearly and factually record the observed behavior or discrepancy. 2. Internal consultation. Seek guidance from the appropriate internal compliance or legal department to understand the implications and reporting requirements. 3. Evidence gathering. If directed, gather further objective evidence in a discreet and lawful manner. 4. Reporting and escalation. Follow the established internal procedures for reporting and escalating the matter, ensuring confidentiality and due process. 5. Objective assessment. Remain objective throughout the process, focusing on facts and established policies rather than personal opinions or assumptions. Question 19. Upon reviewing the financial profile of a long-standing and high-net-worth client of ORIX, the client expresses a strong desire to invest a significant portion of their portfolio in a newly launched, high-risk, speculative product that has recently gained market attention. The client explicitly states they want this product, citing media reports and a desire for rapid growth, and seems resistant to discussing alternative investment strategies. As an ORIX advisor, what is the most appropriate course of action? Option A. Conduct a thorough suitability assessment to determine if the speculative product aligns with the client's stated financial objectives, risk tolerance, and time horizon, and if not, explain why and propose suitable alternatives. Option B. Immediately invest the client's funds in the requested speculative product to satisfy the client's explicit instruction and maintain a positive client relationship. Option C. Proceed with the investment as requested by the client, but make a note in the client's file that the investment was made at the client's insistence, despite potential suitability concerns. Option D. Politely decline the client's request, stating that ORIX does not offer such high-risk products, without further discussion or exploration of alternatives. The correct answer is A. Conduct a thorough suitability assessment to determine if the speculative product aligns with the client's stated financial objectives, risk tolerance, and time horizon, and if not, explain why and propose suitable alternatives. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate desire for a specific investment product and the advisor's fiduciary duty to recommend suitable investments based on the client's best interests, as mandated by the ORIX hiring assessment test's regulatory framework. The advisor must navigate the pressure to meet sales targets or please a high-value client while upholding ethical standards and regulatory compliance. Careful judgment is required to ensure that any recommendation is not influenced by personal gain or external pressure, but solely by the client's financial situation, objectives, and risk tolerance. The correct approach involves a thorough assessment of the client's financial profile, including their investment objectives, risk tolerance, and time horizon, before recommending any product. This aligns with the core principles of suitability and client best interest, which are paramount in financial advisory roles under the ORIX hiring assessment test's guidelines. Specifically, the advisor must engage in a detailed fact-finding process, document all discussions and assessments, and then propose products that demonstrably meet the client's stated needs and risk appetite. This proactive and client-centric methodology ensures compliance with regulatory expectations that prioritize client welfare above all else. An incorrect approach would be to immediately proceed with the client's requested product without a proper suitability assessment. This fails to uphold the fiduciary duty and could lead to a recommendation that is not in the client's best interest, potentially exposing them to undue risk or failing to meet their financial goals. Such an action would violate regulatory requirements for due diligence and client protection. Another incorrect approach is to dismiss the client's request outright without exploring the underlying reasons or offering alternative suitable options. While prioritizing suitability, a professional advisor should aim to educate the client and guide them towards appropriate solutions, rather than simply refusing their request, which could damage the client relationship and miss an opportunity to provide valuable advice. Finally, an approach that prioritizes meeting a sales target or securing a commission over the client's suitability would be a clear breach of ethical and regulatory standards, demonstrating a conflict of interest and a failure to act in the client's best interest. The professional decision-making process for similar situations should involve a structured approach. First, actively listen to and understand the client's request and underlying motivations. Second, conduct a comprehensive client needs analysis, documenting all relevant information. Third, identify suitable investment options that align with the client's profile and objectives, considering a range of alternatives. Fourth, clearly explain the rationale behind the recommended options, including their risks and benefits and how they meet the client's needs. Fifth, ensure all recommendations and client interactions are thoroughly documented for compliance and audit purposes. This systematic process ensures that client interests are paramount and regulatory obligations are met. Question 20. Quality control measures reveal that a significant transaction processed for a key client of ORIX may have inadvertently breached a minor regulatory reporting threshold due to an administrative error. The client, ORIX, is a long-standing and highly profitable relationship. You are tasked with reviewing the situation and recommending a course of action. Option A. Inform ORIX management of the potential breach, but suggest a course of action that minimizes the perceived severity of the error to avoid unnecessary regulatory scrutiny. Option B. Attempt to rectify the administrative error internally and reprocess the transaction to ensure it falls below the reporting threshold, without informing compliance or regulatory bodies. Option C. Inform ORIX management of the potential breach and await their instructions on how to proceed, prioritizing the client relationship. Option D. Immediately report the potential breach to ORIX Compliance Department and the relevant regulatory body, providing all details of the administrative error and the potential threshold breach. The correct answer is D. Immediately report the potential breach to ORIX Compliance Department and the relevant regulatory body, providing all details of the administrative error and the potential threshold breach. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client relationships and upholding regulatory integrity. The pressure to retain a valuable client, ORIX, must be balanced against the obligation to report potential breaches accurately and without undue influence. Careful judgment is required to navigate this situation ethically and legally. The correct approach involves immediate and transparent reporting of the identified discrepancies to the relevant internal compliance department, and if necessary, to the regulatory authorities, without attempting to conceal or downplay the findings. This upholds the principle of utmost good faith and ensures that ORIX operates within the bounds of its regulatory obligations. Specifically, this aligns with the principles of regulatory compliance and professional integrity expected of financial professionals. The regulatory framework for financial services typically mandates the reporting of suspicious activities or breaches to prevent market abuse and protect investors. An incorrect approach would be to attempt to fix the discrepancies internally without reporting them, hoping they go unnoticed. This constitutes a failure to comply with reporting obligations and potentially obstructs regulatory oversight. Another incorrect approach would be to delay reporting or to present a sanitized version of the findings to ORIX management in an attempt to avoid negative repercussions. This demonstrates a lack of professional integrity and a disregard for the regulatory framework, which requires timely and accurate disclosure of material information. Such actions could lead to severe penalties for both the individual and the firm, including reputational damage and regulatory sanctions. Professionals should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves understanding the relevant laws and guidelines, identifying potential conflicts of interest, seeking guidance from compliance departments when unsure, and acting with transparency and honesty. Even when it presents short-term challenges, the ultimate goal is to protect the integrity of the financial markets and the reputation of the firm.